Welcome to this First Advisors Investor Webinar with me, Giles Rafferty. Today's webinar features Rafaella Resources Limited, which has the ASX code RFR. Rafaella is an explorer and developer of world-class mineral deposits. The company owns the Santa Comba and San Finks tungsten and tin projects in Spain and has agreed the acquisition of the Borala and Villaverde tungsten projects in northern Portugal. Rafaella also holds an exploration portfolio in Canada, comprising the Midrim and LaForce high-grade nickel, copper, and platinum projects in Quebec, and the McCleary cobalt and copper project in the Yukon. Today's webinar is expected to run for about half an hour or so and be split into two roughly equal sections. The first section will consist of a presentation by Rafaella Managing Director and CEO Stephen Turner that will profile the company, walk investors through the rationale for Rafaella's push to consolidate the tungsten and tin market in the Iberian Peninsula, and the strategy for Canada. There will also be an opportunity to ask Stephen questions once he's completed his presentation. Should you wish to ask a question, you can do so at any time by typing a question into the Q&A box on your screen. We will endeavour to ask Stephen as many of your questions as we can during the webinar, and any questions we do not have a chance to get to will be answered via email post-webinar using the details submitted during the webinar registration process. I would now like to introduce you to Stephen Turner, CEO and Managing Director of Rafaella Resources Limited. Over to you, Stephen.
Hello, and thank you for joining me on this investor presentation. As Giles mentioned, I'll be running through a presentation to outline the strategy for Rafaella Resources. And then following that, I'm open to take questions. I'd like to start by just sharing with you this presentation that we launched just recently onto the stock exchange. So it is available to all shareholders. And let me begin by running through this. All right, so I'd like to start by, well, first of all, going through obviously the disclaimer. And then once you've all had a chance to read that in detail, I'll move on and come to the portfolio. So in summary, as Giles mentioned, we hold a number of projects in the Iberian Peninsula and also in Canada. The projects we hold in Spain are the Santa Comba and San Finks tin and tungsten projects. They are located in Galicia, around 60 to 100 kilometers from a deepwater port, and they comprise Santa Comba, which is primarily going to be an open pit project with some underground, and San Finks, a high-grade underground project. And then we've also agreed to acquire the Borala and Villaverde tungsten projects in northern Portugal, which are located around 100 kilometers from a deepwater port just north of Porto. Then we have the exploration projects in Canada, the high-grade Midrim LaForce project, nickel, copper, platinum group elements, which is located in Quebec. We acquired that towards the end of 2020, and the McCleary early stage exploration project. For Rafaella, the focus projects, and certainly the projects which will require the greatest capital going forward in the near term, will be the Santa Comba and San Finks mines. A quick review of the quarterly results. We are a company that's not yet in production, and really the summary is that it's expenditure at the moment. We are not an idle company. We are very actively spending across a number of fronts, and therefore you can see our burn rate is about 400,000 a month. We finished the quarter with $1 million in the bank, so that's clearly something that we're going to need to address fairly soon. But there is a very active program going on across all the projects, and I will run through those now. Just prior to that, though, we'll look at the corporate snapshot. You can see that we have a wide spread of shareholders, no dominant shareholder. We have, as mentioned, $1 million in the bank by the end of the year, the end of the quarter. 190 million shares out in issuance, and our share price has been rather flat despite the recent acquisitions, which we'd argue are highly accretive. So from my perspective, certainly the market yet hasn't really appreciated the value of the acquisitions that we've just recently announced. Let me start with the Iberian Peninsula. So This is a strategy that I rolled out at the Mine's Money beginning of December, just after we had announced the acquisition or the agreed acquisitions of the Braja and Villa Verde projects. The strategy for Rafaella is to recognize that the critical metal of tungsten faces severe supply chain risk. 85% of tungsten comes from China. Next largest suppliers are Vietnam, Russia, and Kazakhstan. And it's very easy, therefore, to see that geopolitical risk is a significant issue for the supply of tungsten. Tungsten is a critical metal used in many industries, mining, oil and gas, medical, and particularly the manufacturing of automobiles. So it has a very strategic and important role within the economy. And Europe in particular and North America are heavily dependent upon imports in from places like China. The European Commission is looking at ways to address that. They're looking at many critical metals and focused on the circular economy. That really doesn't apply to tungsten. It's not terribly efficient. And we also, of course, have exposure to tin, which has also seen a tremendous rise over the last 12 months, also considered a critical metal and critical for the changing economy that we see, particularly around the push towards renewables. So what we've done is we've decided to do consolidation play in Iberia. The reason we say Iberia is because the main Iberian Variscan massif, where a lot of these tin and tungsten projects are located, across through northern Spain and Portugal. And so we now have a collection of 4 projects in a portfolio well placed to provide a long-term stable supply into both Europe and North America, for which we have an aspirational target of supplying about 1/3 of the European market. As I mentioned, all these projects are located close to deepwater ports, and being located relatively close to each other, there are genuine synergies that can be derived in operating all 4 of these. Let me start with Sandfinks. Sandfinks is a project that we announced we had just acquired on the 4th of January. It's a previously producing underground mine, high grade, historically produced about 60% tin to 40% tungsten, very, very clean concentrates with about 70% plus metal contained in concentrate, but for both tin and tungsten. Picture on the left is part of the process plant. There's a process plant in place. That's the magnetic separator. And on the right-hand side, that's actually a shaft that accesses some of the underground, although access is actually through declines that are picked up on the picture on the right. Pozo Nuevo is where it's been mined previously, and the resource, until it was closed in 2017, was accessing the Buenaventura zone. Interestingly, with this project, it has very recent production history, and it has all the mining permits in place. The only outstanding issue to restart development on this mine to bring it back into production is the award of a water discharge permit. We acquired this project from a very large Spanish engineering conglomerate, which had decided to exit the mining industry or the ownership of mines. Had sold several mines over the last year, the Agua Blanca mine, the Rio Narcia exploration portfolio, etc. So we had the opportunity to acquire the Sandfinks mine. Because it was immaterial in the context of the seller's portfolio, we were able to achieve very favorable terms, which include no upfront payment and only $5 million payable in deferred consideration through the payment of royalties. So it's only paid out of production, and that's only up to the first 1,000 tons of production. First 1,000 tons of metal have been sold, which in today's prices is well over $30 million. So extremely favorable, but not only that, and very important, has been the work that this company has done on putting the water discharge permit in place, which has been extensive environmental test work to treat the water for the discharge. That's the technical solution has all been signed off. It's going through a public consultation process, and we are keen not to lose all that work done. So there's actually an ongoing collaborative effort between the seller and ourselves to get that water permit in place. They continue to provide us support all the way through, and in fact, they remain liable for all restoration costs until that water permit has been awarded. So for us, a highly, highly accretive deal, and in fact, Sandfinks by its nature, effectively leapfrogs Santa Comba in terms of being the likely first producer for Rafaella. Let me look at Santa Comba now, which has been our flagship project, and one that we focused on over the last 2.5 years. On the left is a pilot plant. We announced that in September that we had started producing through a pilot plant from the underground ore. The picture on the right is actually retrieving from the high-grade stockpiles. The real key thing to stress here on Santa Comba is its potential for scale. It does have an underground operation, but really the focus has been on open pit, and we have done significant work around expanding that open pit resource and doing a lot of metallurgical work, test work. And we announced recently the outcome of that metallurgical test work that's seen nearly a 6% increase in recoveries from our pre-feasibility study that we released at the end of 2020, and that will be producing a calcium tungstate, which is a high-grade, a very marketable premium tungsten product. And so we're now in the final stages of finishing up the definitive feasibility study. And as part of that, we'll also be applying for an open pit permit application, and we'll be applying for it on a fast track basis, being a strategic industrial project in the region, which under the rules takes around 18 months to get through. All right, so really it's the scale though here that we want to focus on. There's mineralization all the way up this 7-kilometer long massif, and we've only just scratched the surface, quite literally, at the southern end of this mineralized zones. So what have we done at Santa Comba since we took it over? Well, we've done 2 large drilling campaigns to create a maiden JORC resource in 2020, and we completed a pre-feasibility study which showed that the project to be highly economic. And then all of last year we really focused on increasing the measured indicated to be able to feed into a DFS, and also focused very heavily on the metallurgical test work to make sure that we really bottom that out. We need to recognize that there are a number of projects in the region that have all had various issues around processing in terms of the treatment of the producing clean concentrate, and also on the recoveries. And so we wanted to take lessons from those projects, and we have extended our metallurgical test program to really take on board all the lessons from these other projects and make sure that we've got it right from the get-go. So 2022, we'll see the DFS out, and we'll see in Q1 also the open pits permit submission going in the beginning of Q2. Bria and Villaverde, quick summary there. These are an agreement to acquire these projects, and this is underway. This was announced at the end of November. These are projects that have been previously producing. Bria shut down in about 1985. It was the second largest tungsten producer after Penasqueira in Portugal, and Villaverde was the third largest when it shut down in '86. Quick look at Bria. That's really probably the focus of those 2 projects. It has a high-grade shallow zone in the St. Helena breccia with some very good intercepts, and that really will be the focus once we complete the acquisition, is to define that better. Bria does have an exploitation permit, so it's got a full mining exploitation permit that was awarded at the end of last year for 25 years plus 2 15-year extensions. So this is a project that has the ability to move forward very, very quickly. Quick look at the indicative forward program. Obviously, this is subject to many assumptions and caveats, but I'd like to say that look at Santa Comba first. The DFS and open pit permit applications will all be done and completed in the first half. The DFS in the first quarter and the open pit in the second quarter. You then have the approval process moving into development. Alongside that will be a continued work on the underground, which is already fully permitted, and look to scale that up. So there's a ongoing work in the underground to review the resource, get a better model around the resource. We've been looking through all the historical records. We've been taking samples through the underground galleries, and we expect an update to the market on that fairly soon. Sandfinks, we are waiting on the water discharge permit that's very active, and then we can move very quickly in development and production. Bria, we'll look to close this quarter, those projects, possibly beginning of Q2 for the closing of that. It really depends when we complete our mineral resource estimate as part of a condition to closing. And incidentally, that resource, the pricing of Bria is based on a 25,000 ton resource being ascribed to it under JORC at a 0.14% grade, the 4 million euro acquisition price is then scaled against that. So if the resource comes in at 20,000 tons, we pay 80% of the 4 million. So that looks to close probably in late March or maybe April. And then we'll immediately start focusing on the scoping study and resource drilling in Baraja to lead into an environmental impact statement and a DFS, which is the requirement to start production under the exploitation permit. All right. Let's move on to Canada. Canada is very exciting for us. The acquisition of Midrum LaForce really gave us a good exposure across the battery metal sector, exposure to really nickel, copper, two areas that we find extremely attractive going forward, and we can see the strengthening prices there. Midrum and LaForce have been underexplored, very high grades encountered of over 5% nickel and copper across some decent intercepts, but all shallow. And the work before has never focused on the deeper sections of these. In a Gabbroa coasted mineralization, what we have found is that there's often a feeder system that feeds into these shallower mineralized pods. And that's something that we have focused on that no previous owner had done. And we flew in 2021 a low frequency VTEM to penetrate deeper, and we picked up a very interesting anomaly, which we then followed up with a ground floor EM. So we have looked into these high grade pods and looked for the source of those. Our reviews, both by CSA Global and SRK Exploration, have both concluded that it's a proof of concept, that there is indeed the possibility of something much larger sitting below. And there are other world-class analogs that we can point to that have demonstrated that. So what are we going to do with that? Well, what we've done is SRK has completed a full geological review in accordance with 43-101. With the enormous capital sort of draw on Rafaella, on these many other projects in Spain and Portugal, what we believe we need to do is retain that exposure to this exploration program, but probably farm out or even vend these projects and Midrum LaForce into a TSX entity where it can access very cost-effective flow-through shares to fund the exploration program. So the idea would be that Rafaella retain a significant exposure to this, but actually not take on the additional capital costs for that drilling. Want to just sort of wrap up really with the environmental social governance, a very important part of all mining companies. It's certainly a major focus for us. We have signed an MOU with a leading Spanish energy company, renewables company called Energy Capital, which is looking at supplying renewables into both Santa Comba, and that'll be expanded to San Finks. And also across the border as well. So this is really the idea to drive these projects to a carbon neutral operation. And also a very important part of our program is to employ locally and procure locally to make sure the investment goes into the community. So quick wrap up there to say that in Iberian Peninsula, we've built an enviable portfolio with exposure to critical metals and near-term production. And at Canada, we've got a high-grade exploration portfolio, which we will retain exposure to going forward. So that's a summary, a quick run through the portfolio, and I now open the floor to questions. Giles.
Well, thank you very much, Stephen, for that presentation. As you say, the floor is open to questions, and I've been monitoring questions while you've been presenting, and we do have a number that have come through. Some of them are more about looking for clarity, but let me run through what we have. I got a question, the first question that came through was just a bit of clarity around the resource itself things. I think it was more that someone may have missed if there was a JORC for that. And I know in your deck you were talking about you needed to get a JORC completed. So if you could give any way of giving a sense of the resource at San Finks, I would address that first question.
Okay, so there's two things. First of all, on San Finks, it's been owned by local entities, which have never had apply or produce a JORC report. So although there's quite extensive work done on the underground and it was previously producing, the study work doesn't comply with JORC standards. So we simply cannot release a JORC statement on that. What I can say is that it's had a long life. It's got very clear veins. It's a beautiful resource to walk and have a look at. You can see very clear, large crystals of wolframite in the veins in the granite rock, and also the cassiterite, which holds the tin, is very contiguous through these veins and extends for quite some time. So look, we're very comfortable with the resource that's there. We simply cannot release a number around it because it doesn't comply with JORC requirements. And then when you talk about a JORC resource report being done, that's actually on Barragio and Villaverde, which we've engaged RSC to undertake. We have a site visit next week to that as part of the due diligence, and we'll be producing a JORC resource report on Barragio and Villaverde. So that's a different exercise, but on Sandfinks, we simply cannot release a JORC resource because we don't have a compliant resource that allows us to do so.
Looking beyond Sandfinks and out into the Iberian Peninsula portfolio more broadly, a question from a long-term shareholder that's come through is around the cost. And you mentioned at the end of the December quarter, you had $1 million of cash at the bank. The costs needed to get tungsten production up and running. And also, I think we've answered this, but the question is, which project is aimed to get into production first? And then a sort of an anecdote at the end is very keen to see it get into production, as I'm sure you are too. But the question stands, what's it going to cost and who's first out of the blocks?
Well, first out of the blocks will most likely be Sandfinks now, because we've picked up a project that was only recently producing. It's got a process plant in place. It does need some investment in the process plant, and it does need some investment in the infrastructure to access some of the deeper reserves. And of course, around that, we have to build a water treatment plant. So there is some capital cost required, but certainly substantially less than what we'd need to spend on Santa Comba, and it would come in much sooner. So really what we've managed to achieve through the acquisition of Sandfinks is to acquire a project that we can bring on faster and will generate cash flow that we can recycle into the portfolio so that our overall funding requirements actually will come down. So it's been a very cost-effective way for us to fund the portfolio going forward. So Sandfinks first, followed by Santa Comba, and then probably very soon thereafter, Barragio. So I would expect in the next 4 years or so, 4 to 5 years, we'd have 3 projects up and running, which is why we have that aspirational target of supplying a third of the European market within about 5 years.
The questions continue to come through. We're on Santa Comba, or we're talking about a broader portfolio. One here is about the open pit mining permit and the risk of it not being permitted now. And you don't have a crystal ball, I appreciate that, but there obviously, this is something that's still ongoing. How do you characterize the risk of that permit not landing, or do you even, countenance that?
Well, actually, I mean, there's always a risk with any mine permit. We see that with mines all over the world, not just Spain. So, we are making sure that the work that's done around the mine, first of all, is of a very high quality. We've engaged a number of top consultants to put together the mining permit and the studies that underpin it. But there's a big focus on the social governance side here in Spain. So we will be stressing the benefits to the local community, the job creation, and that's really considered very, very important. And there's no doubt that Santa Comba will generate enormous employment for long-term stability of job security, et cetera, going forward. So we think this is a great news for the economy, but even on a wider scale, of course, Santa Comba supplies a critical metal, and that has priority in places like Galicia. So I mentioned we'll be applying under a strategic industrial project scheme. That means that it actually halves most of the timeframes to go through any sort of processing or permitting, because it has it therefore has political support to take it through. In addition to that, we are working with the European Raw Material Alliance, which is a representative of the European Commission, who are focused on securing raw materials into Europe. And with the portfolio that we've just built, we're having a very good dialogue with that Raw Material Alliance to support the project going forward.
There's a couple of questions on a similar theme around offtake that have come through. One quite broad, just I wanted to know how negotiations with offtake parties are going, how many parties are interested, and one more specific about Santa Comba, and asking a question, and I'm sure some of this is confidential because it's a commercial negotiation, but asking the question, is Transamine still looking to partake in offtake as was announced in a previous announcement or an older announcement? So just some context around what's happening with offtake, and how many parties might be involved. And if you feel comfortable to speak to Transamine, I'm sure you can't discuss something that's confidential, but that's part of the question.
Yeah, so look, with the metallurgical test work results that came out and determined the product, we now have an interesting product mix going forward. So we'll have tin concentrate coming out of St. Finks, we'll have tungsten concentrate of very high grade, around 70% coming out of St. Finks as well. And then we'll also have highly marketable calcium tungstate out of Santa Comba. When I've gone out to the off-takers and traders in the market, they find this very, very attractive. This has been confirmed by quite a number of parties. So the spread of commodities within the tungsten products and also having tin really makes our portfolio very interesting. And so we are having discussions with multiple parties, and when I mean multiple, I mean 5, 6, 7 different off-takers. So it's quite there's quite a lot of appetite out there. I won't go into the names of who we're talking to, but it's a mix of direct end users and traders, and the discussions are going very positively. There's a data room open, and people are having access to our results. So that's very much live at the moment, and we remain very positive that we'll get an attractive offtake agreement.
Bringing it to the immediate, with the next question that's come through, how much annual income do you expect to generate from the current pilot plant? So someone who's obviously looking at the immediate horizon.
So the current pilot plant is not producing a product at the moment. So what we did is we took the underground, we're crushing, and we're doing a first stage concentration. So we're producing a pre-concentrate at the moment. We're stockpiling that. We're studying it. We're sending it off for assays to understand exactly what the performance is like and how to best treat it. The reality is that acquiring something like St. Finks gives us the opportunity to go ahead and process this potentially without having to build the back end. So that allows us to move forward the underground much faster. We don't have to wait for the much larger plant that we need to build around the open pit. And we could, in theory, okay, so this is still to be studied, but we could, in theory, take that pre-con and ship it across and treat it at the St. Finks because they're both high-grade underground type of ore. So that remains something that we need to investigate. But at the moment, we're not producing a saleable product. We're producing a pre-concentrate, which we're storing for future treatment.
The question, looking to your peers, has come through. And it's along the lines of, if we look at some of your peers, we're looking at valuations per ton in excess of $1,000, up to $1,500, $1,600 per ton. Your valuations would be less than half that. Is there any way to explain this disconnect in how the market's viewing you?
I think one of the questions I've had by several shareholders is don't really understand the St. Finks deal. It looks too good to be true. Well, you know, the simple fact there is that the seller was made a strategic decision to exit mining. 5 million euros is entirely immaterial to a 1.5 billion euro company. So they were quite happy to negotiate around the payment terms for that deal. And so we'd managed to get, I think, an extremely attractive deal. If you look at our current trading, we're trading around $700 per ton of tungsten. But that entirely excludes, that's only based on the Santa Comba numbers, which is 18,300 tons of tungsten in our resource. So there's absolutely no valuation in there whatsoever to do with the St. Finks acquisition. And if you look at the Portuguese acquisitions, and you only look at the 25,000 ton target for the pricing, that works at around $250 per ton. So, you know, the highly accretive deals coming in. And if you were to roll in that 25,000 tons, just as an example, into our portfolio, we'd be trading down about $450 a ton. So, and again, no recognition for St. Finks at all in those numbers, no recognition for Villa Verde in those numbers. So, yes, we are trading, I would argue, at a significant discount. And why is that happening? Well, perhaps people haven't really understood the attractiveness of these deals and what our portfolio represents going forward. We have done these deals over Christmas, which is never the best time to get these deals out in the market. And really one of the purposes of this investor presentation is hopefully get that story out there.
It's questions still coming in, and I know we're up against our half-hour threshold, but we said there or thereabouts, and I think it's probably worth continuing with a couple of them. What's the status of the nickel, copper, cobalt anomaly within Santa Comba? And will Rafaella be developing the Corcel area? Has come in from one of the audience members.
Yeah, so Corcel has nothing to do with Rafaella. Okay, that's they sit within the same concession area, and that deal was done prior to Rafaella acquiring Galicia Tin and Tungsten, which holds the Santa Comba project. So the nickel rights were sold off to Corcel by the previous owner of Rafaella, of Santa Comba. And the only reason there's some confusion is that that transfer has never been formally approved by the mining authority, and therefore our name remains on the concession for those rights. But commercially, we have no rights to those nickel assets. They're still being developed by Eurobattery that owns Corcel, and it's an entirely separate company.
I think one thing I might wrap up with this question, because I know we pushed the time envelope a little bit here, but there's this impression from the questions we've come through from what we're seeing in the market, is that the opportunity in Spain and Portugal is really exciting, and that maybe that's a better place for you to focus your energy shareholder funds on. Focus on Spain, maybe not so much Canada. How do you see that balance?
Well, that's exactly what we agree. In fact, people have also said to me, why are you still focusing on Santa Comba and not focusing on San Finks? Well, we've nearly completed the work on Santa Comba feasibility study and the open pit permit, so we'll get that in. But really, the focus will shift towards San Finks in terms of the larger capital spend to bring that onto production as quickly as possible. In Canada, as I mentioned in the presentation, we really like that exploration. Don't get me wrong, we think it's tremendously exciting. We just believe that it's better that we bring in a third party to fund the next stage of that campaign, which is why we spent some time putting together a very comprehensive geological report under the 43-101 guidelines, so we can utilize that to put it into a Canadian entity and access much more efficient or low-cost funding options through what they have in Canada called flow-through shares. Our assets are located in Quebec. Quebec offers the highest multiple step up on flow-through shares. It's the most efficient place to raise capital for exploration. So really, it makes a lot more sense to do this whilst retaining that upside for Rafaella shareholders.
And just quickly on that, that's the plan for the Canadian assets that you've just outlined. I've got a specific question. Say, are there currently talks with third parties relating to that, or is that a plan that you're looking to implement?
No, there are talks. In fact, that geological report produced by SRK has already been shared with a fair number of parties. So those talks are active now.
We really are up against our time threshold. I do have one final question, literally hit the inbox as we're speaking. When will the Santa Comba DFS be expected? Can you put a time frame around that? Is it possible to be anyway prescriptive about that?
I would, and I'm always nervous putting these out because we've put those deadlines out before, and unfortunately, through to additional work on metallurgy, etc., those deadlines have slipped. So, but I do think that we've got the metallurgy behind us, which was the main blocker to getting the DFS out. So that's now completed. So we are in the final stages. All the capital costs are in. Okay, all the operating costs are in. The numbers, the mining schedules are now being run by Wardell Armstrong, and with that completed, I would expect it out certainly this quarter.
Well, Stephen, thank you for that. We do have more questions than we have time to ask, so we'll pass them through, and you have the opportunity to answer them offline. But look, clearly there's a lot of excitement around tin and tungsten, around the Iberian Peninsula within Rafaella, and it would be great to have the opportunity to connect with you again and just to check in with your progress as you go forward. But for now, Stephen Turner, Managing Director and CEO of Rafaella Resources, thank you very much for the presentation and for the additional time to answer the Q&A.
Thank you. Thank you for your interest.